Tonight, recession fears grip Wall Street. All 30 stocks are down. Every single sector is in the red. You see the Dow there near the lows of the day, down 750 points or so. Volatility is spiking. It comes after the main yield curve inverted for the first time since the Great Recession. Investors are fleeing stocks and heading for bonds because the German economy is shrinking. China's industrial production is slowing, and Donald Trump's trade war is still looming. The signs are pointing to a global economy that is sputtering. Cristina Alesci is live for us at the New York Stock Exchange. So, Cristina, we are down 750 points. I mean, it seems as though volatility is really the name of the game right now.
That's right. Fierce selling for sure. Volatility has been back. We've seen it come back. But these swings today are just pretty much incredible. Let me just put some context around this. 3 years ago, Donald Trump said only he could save the economy. Today, recession fears are spiking because of his ill-planned trade war that is making the rest of the world very uneasy. And now he wants the Federal Reserve to bail him out. Well, investors are bailing out on him, it would seem. The stocks have been selling throughout the day. And let's not forget the unrest that's going on in the rest of the world, the geopolitics that are playing into this, the unrest in Hong Kong, for example. And plus, investors now realize today that they may have been a little overly optimistic yesterday when the administration announced that it would delay the tariff implementation until December. Today they realize, well, that doesn't necessarily mean an end is in sight for the trade war. And by the way, there is still about $100 billion worth of products that do face tariffs that are coming into the U.S. from China. So all of that weighing very heavily on investors, including that signal that you mentioned in the introduction, the inverted bond yield. Very simply put, that means that it costs more to borrow over a shorter period of time than a longer period of time. That is not the natural state of affairs, and that is sending a very strong signal of a recession. Some on the floor here today say it's overblown, that we need to see this inversion for a sustained period of time for it to be a real indicator. But let's remind viewers that every time we've seen this kind of inversion, recession has followed. Zane.